This is World News Tonight with Peter Jennings.
Good evening. We begin with the economy tonight. New strength in the construction industry, new activity in the manufacturing sector, and new optimism among consumers. Now, most economists are not quite ready to break out the champagne. Since the recession began 2.5 years ago, the economy has turned up twice, only to turn down again. Still, there is a growing body of evidence that this third time may be different. There are significant obstacles on the road to recovery, and one certainly is the credit crunch, the reluctance of many banks to lend money, especially to small businesses. Bank managers say it's a matter of being careful. Small business owners say the banks are playing Scrooge. ABC's Brian Rooney is in Portland, Oregon.
Bridge City Toolworks makes some of the best woodworking tools in America. Business has grown every year for a decade with sales of $4 million last year. The company, like thousands of small businesses, depends on a line of credit from the bank to buy raw materials and cover expenses when sales are slow. Despite a good credit record, Bridge City can't get the money this year.
We have gone from the ability to borrow $300,000 5 years ago to not to be able to borrow one penny today.
Bridge City was preparing to expand when the bank asked for collateral worth 5 times the amount of the loan, which amounted to saying no.
We've laid off 30% of our workforce. We've downsized our manufacturing expectations. We have not been able to publish our catalog.
Banks have done this to businesses all across America, cutting off customers or making credit requirements too tough to meet, which makes it even harder for small companies to survive in the current economy.
Bridge City's lender, the U.S. National Bank of Oregon, declined to talk about changes in its loan practices. But in general, the banks say that tight federal regulation since the savings and loan crisis discourages them from making certain kinds of loans.
They have tightened up the standards that they examine banks on. Banks, in turn, have passed those tightened credit standards along to the borrowing customers.
Government regulators are pressuring banks to lend primarily to businesses that have lots of inventory, property, or cash. The banks find it easier to invest in risk-free Treasury notes. Financial managers say the resulting credit shortage puts a drag on economic recovery.
We could be talking about very little economic growth for the next 3 or 4 years unless banks start lending again.
Bridge City is appealing directly to customers to buy what they can now and generate enough cash to save the business.
If I have my way, we will never borrow money from a bank again.
But unless enough money comes in, Bridge City, like thousands of other profitable companies, faces the danger of closing. Brian Rooney, ABC News, Portland, Oregon.